from a business relevance point of view, would you be able to, share some examples because that will really benefit our learners?
The next concept which we call is periodicity concept. It has this relevance to this going concern. So because we say the life of business is infinite, so how do you actually understand that my business is doing good, or is it earning profits? Are you going to wait till the end of the business? You cannot wait till the end of the business because you are assuming the life of the business is infinite. So to understand whether your business is doing good or not, this entire life of the business we divide it into small periods, and these periods are called as accounting periods. For at end of each accounting period, you are making the financial statement. So that is where you understand whether so far it is doing good or not. It is not a kind of a thing that for the entire life it will do good, but for that particular duration, what is the profit, what is the loss, you understand. That is your periodicity concept. Next concept, or rather it is a convention which we call is consistency. When we say consistency as such, what do we actually mean here is there are a lot of process, lot of policies, and the management has a discretion. Again, we come back to this discretion that which policy to follow. Whether it is the method which you are following for a particular assessment, like normal inventory. We have last in, first out, and various ways to value your inventory. Now you have decided that the valuation of inventory is to happen by first in, first out in this accounting year, and the next year you want to change it to last in, first out. The third year you say no, this was not good, you go back to first in, first out. What is going to happen here is generally the stakeholder compare your balance sheets for every year. Now the base itself is not proper because in the first year you valued your inventory in one particular way, in the other year you valued your inventory in another way. So there's no base for comparison. So inventory again is one of the examples. There are for various items which are there are lots of processes and policies which are available. Methods to calculate them. It is the right method is what you have to pick and choose. Generally, most of the companies follow what is the industry trend. Pick and choose that method and consistently follow this particular method or a process. Again, I'm not saying that you cannot change the process, but there has to be a valid reason to change this particular process or the method, and you will have to mention it in the statement that why you have changed it, and because of this change what is the difference which is there, because if the last year's profit would be compared with the current year's profit, how it would have differed. That kind of a thing has to be given.
You just spoke about having a consistent method. For example, you spoke about the FIFO method, you spoke about the last in, first out method. So generally, and you said that if you want to change the method, you give a business justification, so that's mentioned and justified. But generally, if I've opted for a FIFO method, how long do you think it should remain like that?
If I have opted for my FIFO method, as I said, there has to be a proper research. I wouldn't say all inventory needs to be valued at FIFO method. You might be having 3-4 types of inventory. A particular inventory, you say a type A inventory is where you value it with FIFO method, a type 2 inventory with LIFO method. So when you are saying, deciding on the method, there has to be a proper amount of research and analysis happening behind, and then you decide on the method. Now, it might happen that you are changing your inventory, a new product is coming into picture, or you are the raw material, there is some changes happening because there will be technological changes, a lot of changes would happen. So that is the time, yes, you might think that this method was not right and we have to shift it to another method. But again, when you are shifting it, I would say that there has to be a proper research and analysis which has to happen, and then only shift, because if you shift, again you will have to follow that for a long duration of time. So there has to be a proper justification given as to why you are changing that particular.
Right.
So there is no fixed time that you do it for 2 years or 5 years or something like that. It is like when you start, it is expected till the end you will follow the same thing unless and until there are certain,
there's a business need, there's a justification.
Yeah. Now, conservatism in business means you should always think about your losses.
Okay.
In business, if I'm saying I'm conservative because I'm not concerned about my profit, but I'm very much concerned at what if I have losses. So, as the principle says that you have to always make provisions for your future losses, but never think about your future profits like that. So normally, as you and me take life insurance or health insurance, we don't want to fall sick or we don't want to die, but we take insurance. Right? Likewise, in business, you don't want your business to be in losses. Absolutely. But there can be losses, so make yourself ready to face these losses. And that is what is the principle of conservatism or prudence trying to tell.
Right.
Yeah. So, and the last concept which we have is the full disclosure concept. So, try to give as much information as possible in your financial statements, because there are n number of users from different walks of life who are going to use this information, and every user will have a different purpose for using. Like internal management would be using your financial statements for a different purpose altogether. An employee in that particular company would be using it to understand, what is his growth in the company. Yeah. A management such would be deciding on whether to expand, whether to cut short. They are looking for something else. Banks, regulatory bodies are looking for something else. So as much possible information has to be given to all the stakeholders, and therefore this concept which says full disclosure, do not try hide any information. Give whatever information is required for all the stakeholders. You also, as a process of that consistency, every year you are writing something about your processes or your policies in the financial statements, and one particular financial year you don't write it. That would raise a kind of a why? What happened? Why didn't they write it? Kind of a thing. Right. So that kind of a full disclosure is very much essential.